and constantly has me asking, like, is that real? Is that real life? Is that what people think? How could they? Like what? Like what is life even?
Hi guys, welcome. In this video, we'll talk about the winners from inflation. Inflation is when prices rise and it's a general pillar of economic policy to keep under control. But there are winners when prices rise too. Hi, I'm Fifi, I'm an engineering consultant living in London, and I make videos about saving money, investing and understanding the economy to make better financial decisions. Now, when thinking about inflation, there are assets that increase in price. One of the most personal and notable examples of this is our homes. The big question is, how does inflation impact us as homeowners? Especially where through this pandemic, we've experienced high inflation in the housing market. Let's get in the mood for this and jump right in. Inflation helps homeowners in two ways. Firstly, it reduces the real value of the mortgage. So what that actually means is the loan amount is fixed, and therefore as your home increases through inflation and as value of goods and services increases, your loan doesn't. Now, there is an argument that interest rates could rise, so servicing that same loan could be a little bit more expensive. However, and overall, with the power of leverage, it in all likelihood will make your mortgage cheaper over time. Well, inflation, when put very simply and applied to homes, increases its value. And as a homeowner, that means that your net worth increases as your asset becomes more valuable. So inflation is a homeowner's best friend in that case. But to be even more exact, inflation is a mortgage owner's best friend, really. Now, I have covered some of these topics more individually in previous videos, but with the house market in the UK being what it is right now, I wanted to bring it all together. At the end of this video, I'll link some of the individual parts because I'm good like that, and I know you fancy a nosy. So the second thing I'm going to talk about is nominal and real interest. So to understand this fully, we need to define and understand what inflation is and the difference between nominal and real interest rates. Now, inflation, when put simply, is the rate at which goods and services are increasing in price each year. And in the UK, it's about 1.5%, and most developed economies have inflation rates between 2 to around 4%-ish. Looking at the data sets going back to, what did I look at? 2005. When we say UK inflation is around 1.5%, that means each year the price of stuff goes up by 1.5%, or conversely, what your pound can buy has gone down by 1.5%. You get my drift. Let's visualize an example though. If your grocery shop costs you £100 at the moment, it will cost you £101.50. In theory, the value derived from things does change, trends change, and a good example is my husband that has been banging on about the PS5 and the idea of owning a PS5. I said to him that it will get cheaper over time, and he was like, yeah, because it's not as desirable or new as time goes on. But groceries, I think, are a better example of inflation, because a potato will always be a potato and always have the same value as a potato does, whether that's baked, chips or whatever, you know. Anyway, I'm going off on a tangent. Let's talk about nominal interest rates, right? And that's quite straightforward. This is the advertised rates of interest from banks. So if you have a mortgage approved at 3%, then that is the nominal rate. It's the rate that you see in all the documents and all the statements when you're buying and completing your mortgage. However, that is not what is actually important. Say what? Guys, I know sometimes what I say sounds ludicrous, but hear me through, right? For us personal finance folks, the real interest rate is what matters. Hashtag keeping it real. I don't know if it's this new lockdown, but I feel like I have to get on the trends, and TikTok is one of those ones that I'm teetering on the edge of. Like, what would I even do on TikTok? But anyway, back to this, the real interest rate. The real interest rate itself is equal to the nominal interest rate minus the inflation rate. You're following? So in this example, with a mortgage rate of say 3% and inflation rate of 1.5%, the real interest rate is 1.5%. Just take that away. But when you look at it like that, it looks pretty sweet, and it is, and it's why mortgages are the cheapest source of money available to us normal folk out here. But let me phrase that a little differently as well, and it's quite powerful to think of it like this. Inflation is paying back some of your mortgage for you. Inflation is awful, bad, evil if you are a saver, and that's if you have cash in the bank. However, inflation is a helpful tool for those that are in debt. So now if your nominal debt, the debt on your statement, is is not increasing, then inflation will lower or erode the real value of your debt over time. Now just rewind and listen to that again, because I'm not going to repeat it. But let me use this as an example from something that is quite close to my heart. So that's real estate investing. I love it. Now let's say we borrow 75% for property that costs something like 300k for say 25 years. We borrow the money on interest only. So in the circumstance that you borrow the money on interest only, at the end of the 25 years, you'll still need to pay the total loan back. And in that example, the 75% loan is 225k. So by the end of those 25 years, you're having to pay 225k because it's an interest only loan. Now that can be awfully depressing because you haven't made a dent in the amount that was borrowed. But the key is that was never the intention, which is how investors approach buy-to-let investing. Everyone does it this way, but that's a topic for another video, guys. Let's go back to the scenario. While you still owe 225k in 25 years time, the real value is approximately 121k, assuming a 2.5% inflation rate. Put simply then, inflation has cut your debt in half in real terms without actually making any payments against the principal. So inflation in that case works like magic. All the while, it also works because it increases the rent on property as well. And the longer you leave the asset, the inflation erodes the real value of debt. And while rent increases in line with inflation,
which is nice. Just had to say that with all that Borat mania out there. Guys, I never was really into Borat until I met my husband. And can you believe that it's been 15 years since the last film? Gosh, that does make me feel old. But he still has it. If you haven't watched the new Borat, it is so bad and so funny. And constantly has me asking, like, is that real? Is that real life? Is that what people think? How could they? Like, what? Like, what is life even?
By the by, I could go on. Just go and watch it. And even if it's not your thing, just watch it. I watched it in 2 parts, so it was digestible. One thing that I have learned is that changes in, say, economics always creates 2 sides to the equation. Those that understand the mechanic and benefit from that, and those that simply don't. And in that instance, cash savers, while doing the prudent thing, lose out to those with substantial levels of debt winning. Now, this is really hard to get your head around when conventional wisdom in personal finance tells us that debt is bad, and it is. Stay tuned for that right now. But inflation is universal and it will impact the price of goods and services across the economy all the while, which does include real estate as well. So it's the basic and simple tenet of economics. We can work through it with real estate, and I am simplifying this with just one route to understanding house prices. But inflation will push up the cost of building new homes, builders, materials, all that will go up in line with inflation as well. So as developers pass that cost on to consumers, they do that by increasing the price of homes. The price of new homes goes up, which also means the price of old homes go up as we look for alternatives, and so on. And so the price of all homes goes up. Now, I don't even know if that makes sense, but it did make sense when I just said it now. I do know it's odd to talk about how debt is good and inflation is good too, but it's also important to heed a few words of caution as well. Here are the videos, go check them out. Let me know your thoughts down in the comments below. Cheers, guys.